Greetings, algo artisans. We have a strategy here that backtests $13,500 in 1 month for Strategy Saturdays on a Sunday. I am going to reveal some of the secret sauce that I was not intending to reveal about halfway through the video, so stay tuned. Let's jump into the charts right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so here's the end of the backtest, and I backtested on Bitcoin for the 30-minute chart, right? So let's move to the beginning of all the testing, and we'll run through it really quickly. The first thing we'll do is explain how this algorithm works. It is a very simple algorithm, and I kept it simple on purpose. So the first thing we'll do is look at the indicators, right? The two indicators that I'm using are Super Trend and Reversal Finder. So to find our indicators, we take a look at this button up here. This is the indicator button with these candles in that line. And as we click it, it's going to open up our indicator menu. And I'm going to type in Super Trend. And here it is right there. I use the one by Kevon Osbilgic. I think that's how I say it. Either way, there is one that TradingView uses, and I'm sure it works just as well or well enough. But in this case, that's the one I'm using, the Kevon Osbilgic. The other indicator we're using is called Reversal Finder. So we click that same button, we type Reversal Finder, and it's the editor's pick right here. So that's the one I'm using, and that's the one that TradingView likes. And it's what these little dots are, this green, yellow, and you'll see red dots up here. So the first thing I do is identify which way I'm going to trade. And when the super trend is red, this line and this coloring up here, that tells me that I'm going short. Now, counterintuitively, I'm going to use the reversal finders for long to go short, right? So let's talk about how the reversal finder works. Very simple how the super trend works, right? If it's red, the trend is bearish. If it's blue, the trend is bullish. These can be used on their own, and their settings can be manipulated for better results as well. However, I'm using a little bit of a counterintuitive method here because I'm going to use reversals to go long while the super trend is short. And this is a methodology that I've developed over time and by watching some other people do the same sort of thing. So in this case, the way Reversal Finder works is if it's green and below the candle, it's long. It's a long reversal. Price will bounce upwards. If in fact the reversal is yellow and on top, it's a short reversal, right? It's just weaker when it's yellow. And if it's red on top, then it's a stronger bearish reversal. And you can use it just by itself. I'm not sure if it's profitable on its own, but what I'm doing is I'm not going long when it says to go long. I'm actually going to let it run up and turn back down because this is a bearish super trend, right? And this can be done with candle theory, right? It can be done with candle theory, although it's not how I'm going to do it. I guarantee you, if I were to go to a lower time frame, I could find a bearish candle setup and enter probably pretty nicely on this candle. So you have, for example, this bullish reversal finder, a bearish super trend, right? Okay, let's do it. Let's actually take a trade here. You'll have this bullish reversal finder, right? Price is supposed to go up, and you'll notice that it actually turns and heads down. That's what I'm counting on because we are in a bearish super trend. So price heads down, and I'm going to go short. That's the trade. How do I know price is going to go down? Well, the basic way would be candle theory, to go to a lower time frame and find a bearish candle setup. Clearly, this is bearish on this time frame, but you get in pretty late if you're going to wait for this candle to close, right? Your trade is still going to be good, but you can't get that great of a risk to reward ratio. So if I were simply going by candle theory, I would go to a lower time frame and find that setup. So for example, I've gone down to the 5-minute, and this is that same candle on the 3-hour, and right as it came up, you'll notice that there was a bit of an evening star formation. Beautiful bearish formation right here. So if I were to zoom in on that bearish candle theory, and again, I have a secret sauce that makes you not have to know candle theory, so stick around. We're going to tell you how to do this without knowing any of these things, right? This is just for people who know candle theory. And I'll give the secret sauce that makes this kind of a no-brainer very shortly. However, this is an evening star. This candle formation, if you know anything about candle theory, you know that once this candle finishes, it's a bearish entry. So I would go ahead out of my short and enter it at the end of that candle. I would have a stop loss set wherever I'd set it. However I do it, I have to go to a higher time frame to see how that stop loss is going to end up. So let's go ahead and do that. Okay, so here is our little 5-minute entry, right? Just as we designed it on the 5-minute, we're now on the 30-minute chart. We've zoomed back out. I would have a stop loss above this structure up here, right? And just to keep it super simple, we're just going to leave it like that. There's ATR stops, there's modified spread stops. With this particular algo, I can keep the stop pretty tight on these, right? At least that's how I've tested. I can have tight stops, right? Not all algos are like that. Some algos, you actually have to have a looser stop. In this one, it can be pretty tight, and you have a 3-to-1 win right there. Look at that. That's beautiful. That's using candle theory, okay? In this particular case, candle theory works out better than the secret sauce, but I'm about to bust out the secret sauce right now. And here it is on the bottom of the screen. It's the stochastic RSI. Okay, so what we have on the stochastic is you have a reversal ping right here, and what you can see is that the stochastic came above the orange right here and then broke down below. So in this case, in this particular trade, I would have entered right here at the beginning of this candle and probably had my stop loss above this candle here. Now, it wouldn't be a 3-to-1, and in this particular algo, I set everything at 3-to-1, so this would have stopped out. It would have been a good trade because I followed my rules, but it would have stopped out, unfortunately. You can see if you go in the future, that price would have stopped out before it hit a 3-to-1. Barely stopped out, right? If I'd have had a deeper stop, maybe it wouldn't have stopped out. If I had put my stop above a little bit higher, but I'm just following the rules, and technically this would have stopped out. And so because that would have stopped out, when you're doing these kind of tests, perhaps you have to look at whether or not you want to use more major structure on these. For most of my stop losses, I did use major structure instead of how I just did it right here, and this actually would have been a winning trade. But in this case, I went ahead and used this hard wick from this bearish candle. It tried to run up, it got crushed down pretty heavily. I put the stop here, and that would have stopped out. The next trade, let's go ahead and review another one just so we can understand how this algo works. And again, I have discovered that this does work best in trending markets. So if it's a flat market, it's not as effective. And again, at Algo Factory, we do have indicators that help us understand how to trade those kind of markets, right? All right, so here's an example of a bullish version of the trade. Now, Bitcoin's on a breakout, super trend is green. You have your reversal finder ping right here, okay? So you look for a trade after that. With candle theory, you probably would find it immediately. However, let's bust out the secret sauce, the stochastic RSI. And what we do is we let the stochastic RSI for longs, we let it go below 80. So it's got to go below this line for longs. If it's short, it needs to go above 20 before it flips. If it's long, it needs to go below 80 before it flips. Because look at this here, you'll see that you actually have your reversal finder ping right here. And then you have your stochastic RSI flip bullish right here. And yes, that's a winning trade in this case, but it's not part of the algo because it's above 80. So here's the algo. You get your reversal finder. Whenever the next candle closes, and for longs, the blue goes above the orange on the stochastic RSI, that's your entry. However, for longs, the stochastic has to go below 80 for it to work out. That's worked out better for my trades, okay? And in this case, it goes below 80, and then it flips down here, which is where I can enter. So the entry is right after this candle right here. So I go long, enter here, have my stop loss below recent structure. Now, does it pay off? Let's see. Oh, looks like it does. So I take it to 3-to-1 because we want to maximize profit on these. We want to make sure that we're winning 3 times as much as we're losing. Now, this course, you might get opportunities to take profit at 1-to-1 or lose the trade, but that's not how this works. My little testing on this time frame on this asset says that if we go 3-to-1, you're actually going to make more money rather than say going 1-to-1 or 2-to-1, right? And in this case, the trade paid off. So we'll do one more example and then we'll take a look at the numbers. Okay, so we have a bearish super trend right here. We have a bullish reversal finder right there. Let's bust out our secret sauce. We have the stochastic rotate out of the extreme, rotate above 20, because remember, we're going short now, so we can't use a flip in 20 for sure. We have to have stochastic RSI go above 20 before we can enter this trade. And surely it does, and it flips right here, so you have to go the candle after the flip because we would not enter until that candle closed. And I would put my stop loss above recent structure, and this is some good strong structure because you have basically a double top right there. Now let's go 3-to-1. We'll see if it pays off, and it does. There's the win. And again, I'm finding that trading this during a flat market does not pay off. And the way we know it's a flat market, there's a couple of ways. Price action can tell you it's a flat market. Price action can tell you when price is just ranging. Probably the quickest way to tell. Or we do have an indicator over at Algo Factory that we know what that indicator is if we're in Algo Factory, and that's extremely useful for knowing if price is in a trend, especially if you use multi-time frame analysis. So let's get into the numbers. We'll just run through the testing really quick. We got a few wins here in a row in a very trending market, several wins, and then we have a few losses where the market flattens out. You can see how price ranges in this area. Price goes back and forth between the same prices in this area, and that's when I tend to be losing these trades. And then when price breaks out, you see it breaks out to the upside, and then you have a couple winners, couple losers when it ranges, couple winners when it breaks out to the downside, 4 or 5 wins, and then again it ranges and you have 1, 2, 3, 4 losses. Again, the ranging markets don't really pay out on this, so it's a really good filter if you see the market ranging. Now what might happen is you lose one trade because you don't know the market's ranging until it ranges for a little bit. So you might lose 2 trades, but when you see it's ranging, you go ahead and identify that range. And we actually teach at Algo Factory how I like to do range breakout trades. So, consolidation breakout trades. So while price is consolidating, I don't use this method. I might lose a couple of trades because I don't don't know it's consolidating until it has consolidated. Again, there are indicators that give us clues that it's about to consolidate as well, but generally you don't know it's happening until it's happening. So these two right here, I might not have taken those trades, right? If I had realized, okay, this is a flat market, let's wait till it breaks out. But then we have a breakout right here and you have some wins, right? A few losses here at the end, but all this adds up to 13,500 in 1 month back testing. I had back tested it almost exactly a month. However, the numbers on the back test are usually not quite as good as reality, but still I think this would be above $10,000 in a month. Now this is trading $500 each trade. Now, maybe you don't have that kind of money, right? Maybe you're going to trade $100 each trade, which would divide this by 3. So if we're going to say it's closer to $10,000 in reality, then you're looking at $3,000 in a month, which is great. $100 to make $3,000 is, it sounds almost like a dream, but that's because what we're doing is we're doing 3-to-1 risk to reward ratios. So one trade makes up for 3 losses. So I can win 1 trade and lose 2 trades and still be doubling my money, right? So that's why this works out so well. And it's extremely simple. Now I do have some modifications to this, right? And I was able to pull out $24,000 in a back test, which realistically probably be closer to $17,000 or $18,000 in real life, which is still amazing money. Again, none of this is guaranteed. I have not live tested it, but this is a great test right here. And there it is. That's what we got time for today. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year, year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey guys. So I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned promising. My goal is to be trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Algofactory.tech. Trade your job, upgrade your life, and we'll see you on the next one.